Hello, this is Charting Man Dan of TheChartGuys, where we teach the little guy and girl how to utilize charts to manage their own trades and investments. What do I mean by the little guy and girl? Well, we just had two directives signed halting the implementation of a rule that requires financial advisors to act in the best interests of their client. Let that sink in a little bit. The big wigs on Wall Street can play with your retirement and hard-earned money without your best interests at heart. We currently have hundreds of members taking charge of their financial future, and we would love for you to come check out a free week with no credit card required to see if our services would be beneficial on your path to financial independence as well. What we offer, we have a separate course of over 5 hours in length on when to enter and exit positions. And in terms of what we do daily, we have nightly videos, key levels updated each morning before the bell, 2.5 hours of live daily webcam coverage in the morning and in the afternoon, and over 7 hours of educational videos. All of these links can be found in the description of this video. Come check us out. Thanks for watching. Let's get on to the technical analysis. Looking at the market rundown heading into Friday, February 10th, and the S&P 500 finally got that all-time high. We had a tightening range of a little lower high, higher low, bull break, bull MACD cross, and the upper Bollinger Band is resistance still. We closed just below it, so we'll have to update that at the open tomorrow. That's going to be a resistance level as well. And we're looking at psychological levels. The all-time high now is 23.1108. We'll be looking at 23.20, 23.25, 23.30. Just psychological round numbers because we have no previous price action to go off of. This is an ideal scenario for the bulls, and we can see a lot more upside depending on how much momentum and volume we see coming in from those bulls. So ideal scenario, IWM is the laggard of the three, and it's trying to break this lower high pattern. It too has to deal with its upper Bollinger Band resistance, and we did break the first lower high, 136.98, so a nice bull break there. Now we're looking at 137.55, 137.96, 138.25. Those are the three resistance levels to be watching. We have a little bit of a higher low pattern, also making a bull break by getting over that lower high, so a similar tightening range to the S&P 500. And on the weekly time frame, nice higher lows the past few weeks, and we're maintaining really healthy consolidation. Just need to get that last push to the upside and see a couple dollars and new all-time highs here, as we have not seen all-time highs in over a month when everybody else is hitting new all-time highs. IWM, a little late to the party. QQQ, all-time high, 3 days in a row. So extremely strong. Technology sector, extremely strong. 127.24, then we're looking up at 128. And we're maintaining an extremely strong uptrend where we're not even thinking about this middle Bollinger Band support. It hasn't even been a factor. The weekly time frame is trying to close above 126.91 to be in breakout mode on the weekly. We got a bull break of the inside candlestick last week. And S&P 500 and QQQ, there is nothing slowing these bulls down. And I said it in my other SPY video, a lot of people are a little bit nervous about the political uncertainty and all that. But as long as you have stop losses in place if you're playing bullish, and as long as the trend stays favoring the bulls, you shouldn't be looking to the downside. You shouldn't be looking for entries into VIX or bearish positions in SPY. We can't give the bears any benefit of the doubt. All the momentum is favoring the bulls, and they keep proving themselves time and time again. All year they proved themselves. Brexit, they proved themselves. On the presidential election, they proved themselves. Every single dip gets bought up, and we continue to higher highs. So having a game plan established for what you want to play and how you're going to play, if we do see a crash or a pullback, absolutely that's fine. But you have to have a clear level where you will begin to seriously look at that. And for me, that's the middle Bollinger Band. We keep holding this level. We held it all last week, and now we're continuing to the upside. So I'm not even going to consider anything bearish in terms of the S&P 500 as long as this middle Bollinger Band is support, currently 22.83. So I hope you have a great night. We'll see you tomorrow. That's that.